Imagine if you had invested just $1,000 in Apple or Amazon 20 years ago. Today, that money would be worth hundreds of thousands of dollars. But here's the best part: you don't need to be rich to start investing. Anyone can do it, and in this video, I'll break it down step by step. By the end, you'll know exactly how to start investing in stocks, even if you have zero experience. Let's get started. Number 1. What is the stock market? Think of the stock market as a giant marketplace, just like Amazon or eBay. But instead of buying clothes or gadgets, you're buying tiny ownership shares in real companies like Tesla, Apple, or Google. These shares are called stocks. When you own a stock, you literally own a piece of that company. And if the company does well, your stock's value goes up, making you money. Number 2. Why do companies sell stocks? Companies sell stocks to raise money for expansion, research, and new projects. In return, investors get a chance to grow their money as the company grows. For example, when Tesla wanted to build more factories, it raised money by selling shares to investors like you and me. Number 3. Why should you invest in stocks? Let's say you save $1,000 in a regular bank account. In 10 years, it will barely grow due to inflation. But if you invest that same $1,000 in the stock market wisely, it could grow to $3,000, $5,000, or even more. The key? Investing smartly and consistently over time. First, you need a brokerage account. This is like an online wallet where you buy and sell stocks. Some great beginner-friendly platforms include Robinhood, Webull, E-Trade, Fidelity. Sign up, verify your identity, and deposit money. It's as simple as setting up a bank account. Before buying your first stock, let's talk about the types of stocks you can invest in. Growth stocks: these companies reinvest profits to grow faster. For example, Tesla, Amazon. Dividend stocks: these pay you passive income every quarter. For example, Cola, McDonald's. Index funds and ETFs: these bundle many stocks together, reducing risk. For example, S&P 500 ETF. For beginners, index funds and ETFs are a great way to start since they lower risk by diversifying your investments. Now, let's buy your first stock. Here's what you need to look for. Company performance: look at revenue, profits, and recent news. Stock price history: check if the stock has been growing steadily over time. P/E ratio: this tells you if the stock is overpriced or a good deal. If you're not sure where to start, ETFs like the S&P 500 are a safe beginner investment. The stock market isn't a get-rich-quick scheme. It's about consistent investing over time. Warren Buffett, one of the world's richest investors, says the stock market is a device for transferring money from the impatient to the patient. So, avoid panic selling, invest regularly, and think long-term. So, now you know exactly how to start investing, even as a complete beginner. But the next big question is, what stock should you buy right now? In my next video, I'll reveal the top 3 stocks experts believe could skyrocket in 2025. Click here to watch now.